everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals that are driving the markets currently. So Peter, I understand that the USD was on the rise yesterday. Is that right?
Yep, actually the US dollar rallied across the board. The driving force behind it was practically the release of the ISM non-manufacturing PMI figure. It was of August. It was expected actually to drop. It didn't. It rose. And that implied that practically economic activity in the US services sector expanded at a faster pace. Now, we have to understand the background of the release as such. We had expectations that the US economy practically is about to enter a recession, and that could slow down the Fed's tightening of its monetary policy. The release as such practically refuted that idea, that notion. And the expansion of economic activity for the service sector practically implied that the US economy is still rather strong and solid, and that allows for the Fed to have some leeway regarding a more aggressive stance regarding rate hikes in the coming meetings, especially about the meeting on the 21st of September, where we have a 75 basis points rate hike expected.
And how have the Japanese reacted?
True, the US dollar strengthened across the board. However, the strengthening was more related to JPY. We had a wide jump there of USD JPY in comparison to other currencies. And definitely we had a reaction from the Japanese, as it was characteristic that Japanese Finance Minister Suzuki stated that they are watching the developments in the FX market with a great sense of urgency. Now, the statement as such could imply that practically the Japanese may intervene in the markets in order to defend JPY. However, even should such a market intervention take place, that's going to be a little bit questionable in the sense that the weakening of the JPY is, to some degree at least, being created also by the monetary outlook differentials between Bank of Japan and the Fed. So we had a Fed which is continuously hiking rates, raising rates, while BOJ remains on hold, keeping rates unchanged and the monetary policy settings quite loose, and that tends to weigh on JPY. So even should the Japanese government or BOJ actually intervene in the markets and buy yens, that may not have the desired result in the long run, or at least for a month. So we may see JPY strengthening in such a case temporarily, yet once again starting to weaken slowly but steadily, as the root of the problem has not changed.
Wasn't today also China's trade data out?
Yes, and they were pretty worrying. We had an import growth rate which decelerated substantially. Also the export growth rate decelerated. And the trade surplus dropped considerably. All of the above tend to imply that Chinese manufacturing activity, economic activity, seems to be weakening. And that would reaffirm practically the drop below 50 of the manufacturing PMI figures for August, which exactly showed another contraction of economic activity. So definitely a curtailing of China's international trading activities would more or less worry the global economic outlook, as it could slow down the growth rate of China. Hence, given that once China sneezes, the rest of the world catches a cold, so we may see a global economic slowdown as well.
And how about the US stock markets?
US stock markets dropped exactly on the worries that the Fed's aggressive stance is to continue. It was the big question which we had stated yesterday, whether the markets are going to be opening after the long weekend with a more optimistic note, or whether investors are going to be keeping a more cautious note. Definitely the release of the ISM non-manufacturing PMI for August has driven investors into a more cautious note, with all three main indexes of the US stock markets, the Dow Jones, S&P 500 and Nasdaq, being in the reds. So the bearish tendencies seem to continue, and the Fed's intentions are currently driving US stock markets lower.
How about oil prices?
Oil prices weakened slightly, but nothing decisive yet. I would have to say that once again, market worries for a global monetary policy tightening and the possibility of reduced economic activity tended to weaken oil prices. And I would expect that to continue unless we have a substantial answer from the supply side, which we didn't in the OPEC meeting, in the latest OPEC meeting, more or less curtailing production levels. So practically, the market is allowed to continue to weaken oil prices in the coming days.
Is gold's price dropping?
Yes, as we had a strengthening of the US dollar, and given the negative correlation between the two trading instruments, the USD and gold, the strengthening of the USD tended to weigh on gold's price. I would also highlight the rise of US yields. US yields rising are definitely bad news for gold's price, given that the precious metal bears no interest, while on the flip side, US bonds do, and they're rising. So practically the opportunity cost for gold holders is increasing and may be tempting them to switch sides from gold towards bonds.
And what's on the calendar for the day?
Well, we have BOC's interest rate decision, and that's a big issue. The bank is expected to hike rates by 75 basis points. Currently, CAD ORS tend to imply that there is an over 90%, I think it's around 97% probability for such a scenario to materialize. Should the bank actually proceed with a 75 basis points rate hike and actually foreshadow in its accompanying statement that further tightening of its monetary policy is down the road, sounds decisive and hawkish, that could provide some support for the CAD. On the flip side, should the bank in its accompanying statement start hesitating, may not be so decisive, may also imply that future rate hikes are continue to be more data dependent and the size and the timing may vary, that could weaken the CAD somewhat, as that would imply some uncertainty regarding the size of future rate hikes. That would be, in my opinion, the key event of the American session. However, in the American session, I would also highlight the Fed policymakers which are scheduled to speak. That would be Fed Governor Brainerd and Cleveland Fed President Mester. Both are expected to keep a hawkish tone, and that could provide some support for the US dollar. In my opinion, the key speaker would be Mester. Mester is a clear hawk. I would expect a more intense tone in his speech and a more hawkish tone, that more rate hikes are to come, that no rate cuts will be done in the next year, all of that, which could provide some support for the US dollar. Later on, I would be noting the release of the AP weekly crude oil inventories figure, which could be of interest for oil traders. May I remind you that in the last release last week, we had a slight surplus increase of inventories of around 500,000 barrels. Should we see, should we see the surplus being expanded into a wider number, that could weaken oil prices, as that would imply practically that the US oil market has some slackness in its conditions, given that demand was not able to reach or even surpass production levels. Now, during tomorrow's Asian session, I would be noting Japan's GDP rate. It's the revised rate, it's for quarter 2. it's expected to accelerate somewhat, and if actually so, theoretically could provide some support for JPY. But given the wider, the big picture surrounding the Japanese yen, it may also pass unnoticed. It's something which we'll have to wait and see how during tomorrow's Asian session the market will react. Also, I would be noting for Aussie traders, Australia's trade data, with special interest being on the trade balance. Now the surplus is expected to narrow a little bit, and that could weaken those. So that would imply that the Australian economy benefited less from the country's international trading activities. And on second note, I would also be highlighting Governor Philip Lowe's speech near the end of the Asian session tomorrow. I would expect him to make some comments regarding the latest interest rate decision of RBA on Tuesday.
Any final comments?
Well, once again, I would like to see whether the cautious sentiment of the market is going to continue. If actually so, we may see US stock markets dropping. We may also see some riskier assets such as commodity currencies weakening. On the flip side, we may see the US dollar strengthening further. Should we see another rise of US yields, we may see gold's price as well as JPY's price dropping.
Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Yossi.
So welcome to the technical analysis part of the presentation. In front of your screens, you have the US dollar index. It's the 4-hour chart. And practically all charts which are to be presented, unless otherwise stated, are to be of that time frame. Now, with no time to waste, let's make a small comment about the USD index. The USD index, which has been on the rise yesterday, surpassing the 110 resistance line. At this point, definitely the 110 has to turn from a resistance line to support line, given that the price action has moved decisively above it. So we're going to be requiring a new upper level as a third resistance level. That would be the 113. And I would also readjust the latest to somewhere here, the 110.6970. Yep. 110.70, the first resistance line. Second resistance line being placed at 112. And final resistance level being placed at 113. Locking this in. Let's have a look now at the support lines. Give me a sec. Now we tend to maintain the 110, which now turns into a support line. And as we have mentioned, that the price action moved above it. Next one would be 109. And the final support line being placed at 108. this in. So we tend to maintain our bullish outlook for the index as long as the price action remains above the upward trend line incepted since the 10th of August. This one here. But we have to note that in the daily chart, let's drill out a little bit to the daily chart. We can see that there is an upward trend line guiding the index since around the 9th of February. Let's verify the date. 10th of February, sorry. So practically the current rise, which has been driven since the 10th of August, 11th of August, is practically an intensification of the bullish tendencies for the US dollar, which have started to drive the greenback higher since mid-February, or beginning of February if you prefer. Once again, back to the forward chart. Should the bulls actually maintain control over the index, we may see the price action. Let me make some correction here. We may see the price action rising, definitely breaking the 110.70 and start aiming for the 112. It's characteristic that for the bullish tendencies to be maintained, we would require the next peak to be higher than the last one, which was at 110.70. Otherwise, that could imply some stabilization, and in which case we may see the price action stabilizing between the 110.70 and the 110, possibly breaking also the upward trend line we have mentioned, which has started since the 10th of August. For a possible bearish scenario, would require clear breaking of the S110, also a breaking of the prementioned upward trend line, and the price action to aim, if not even breach, the S2 109 support line. Okay, let's have a look now at EURUSD. EURUSD, which continued its drop. It's actually now testing the 0.99 support line. The bearish tendency seems to be maintained, given that the pair's price action remains below the downward trend line, incepted since the end of August. Should the bears maintain control, we may see the price action finally breaking clearly the S1 0.99 support line and start aiming for 0.98. At the same time, we would note the downward inclination of the Bollinger Band's median, the 20 moving average. Please note that there seems to be a divergence from the 100 moving average. It's widening the spread. While the RSI indicator below our forward chart remains between the readings of 50 and 30. Currently let's have a look. Yep, it's 43. Could be lower, but still it's indicative of the bearish sentiment, which has started since around the 1st of September. Note that the majority of the price action for the RSI index since the 1st of September is below the reading of 50, exactly showing this bearish tendencies. Markets' attention has started to shift towards ECB's interest rate decision tomorrow. Yet we'll have a better look at this tomorrow when we will be discussing also ECB. Should the pair stabilize somewhat, we may see it breaking the prementioned downward trend line, remaining between the 100.95 and the 0.99. For a bullish outlook, we would require clear breaking of the downward trend line, the R1 1.0095, and the price action to start aiming for the 1.0290. Let's have a look now at GBP/USD. That would be cables for chart. It's interesting to note that cable, despite practically having some bearish tendencies, seems to be finding also trouble at the 1.1450, being tested once, twice. So there may be some stabilization here. On the other hand, though, we have to note that the price action remains clearly below the downward trend line, incepted since the 11th of August. Hence, we tend to maintain our bearish outlook. And we would expect the price action of cable to drop below the 1.1450 and start actively aiming for the 1.13. In case a stabilization occurs, we would expect the price action to remain between the 1.1645 and the 1.1450. I wouldn't be surprised to see the price action testing initially and finally breaking the downward trend line, yet remaining between the R1 and the S1. For a bullish outlook, we would require A, a breaking of the downward trend line, B, the breaking of the R1, 1.1645, and C, probably the price action to start aiming, if not even testing, higher grounds such as the 1.1755 resistance level. Let's move to USD/JPY, which was the surprise of the day. USD/JPY, which has risen and broken the 130.43.50, forcing us to search for a new resistance line, being placed now at 150. Okay, well, in red. Let's correct the labels as well. It's practically a new 24-year high for the pair. And it's quite worrisome where the pair is heading to. Given the weakness of the JPY, the weakness which, as mentioned before, in the fundamental analysis was caused practically by the interest rate differentials between BOJ and the Fed, given that the Fed's continuing to hike rates, while BOJ seems to be maintaining its interest rate unchanged and at the same time keeping the monetary policy settings rather loose. Moving now to the second support line, being placed at 141.50. And the final support line being placed at 139.40. We have to note that some analysts, for example, I was listening to Bloomberg yesterday, expected some action by BOJ or the Japanese government regarding a possible intervention at the level of 145. That's something which we should bear in mind, in which case we may see USD/JPY dropping. For the time being, though, the bullish sentiment is maintained, and it's characteristic that the RSI indicator has clearly surpassed the reading of 70. It's actually near 90 right now. 86 actually. And on the one hand, yes, definitely the rise of the RSI indicator above 70 confirms the bullish sentiment. On the other hand, though, we have to note that the pair may have reached dangerously overbought levels, and that could be an issue for the bulls. Traders may start hesitating, buyers may start hesitating, and may start selling the pair in order to more or less book in the profits, which could cause a correction lower. So practically, yes, the bullish sentiment is there, but the pair may have reached overbought levels and may be ripe for a correction lower. Now, should the bullish sentiment be maintained, I wouldn't be surprised to see the price action aiming, if not even breaching, the 145.50 resistance line. On the other hand, a stabilization could also occur, and it would be interesting to note in the 1 hour chart. Let's drill into the 1 hour chart for a minute. You can see that there has been a stabilization in the European session around 144.15, 144.10. So that could be signaling that the bulls may be hesitating, in which case I would be expecting the pair to remain between the 143.50 and the 145.50. Also note that the price action has reached and in some cases had surpassed the upper Bollinger Band, which may cause the ascent of USD JPY higher a little bit cubism. So we may see it practically being maintained. On the other hand, should a correction lower take place, I wouldn't be surprised to see USD JPY breaking below the 143.50, breaking possibly the upward trend line and the 141.50, either way, and aiming below it. I would require nothing less, maybe even a breaking of the upward trend line incepted since the 10th of August. Let's move to the second safe haven currency pair. That will be USD-CHF. USD-CHF, which seems to be finding considerable resistance at the 0.9860. So we have to note this problem for the bulls. On the other hand, though, the upward trend line remains intact. The upward trend line, which hadn't set since the 10th or 11th of August. That's a bit of an issue. So we have some, I would expect the bullish sentiment to be maintained, yet some stabilization tendencies seem to be present for USD-CHF. Let me move this a little bit further to the left. Nevertheless, should the bulls maintain control, we may see the price action finally being able to jump above the reading of 0.9860, which is also a first resistance line, and start actively aiming for the 0.9975 resistance level. On the other hand, should the stabilization occur, I wouldn't be surprised to see the price action correcting even a little bit lower, breaking the upward trend line, yet respecting the S1 0.9765 and maintaining the price action between the R1 0.9860 and the S1 0.9765. On the other hand, for a bearish outlook, we would require a clear breaking of the pre-mentioned upward trend line, a breaking of the 0.9765, and the price action to start actively aiming, if not even testing, the 0.97 support level. Let's move to commodity currencies and use the CAD. Use the CAD, which rose but failed to actually break the 1.3205 resistance line. It was very characteristic how it was respecting the level. So there may be some tendencies for stabilization here, which are in play, which should not be underestimated. On the other hand, we have to wait and see how BOC's interest rate decision will be affecting the pair later today in the American session. Should BOC actually deliver a 75 basis points rate hike and be able to excite traders, I wouldn't be surprised to see the price action dropping, possibly, not possibly, definitely breaking the upward trend line, which was incepted since the 26th of August. So it would be something like dropping, breaking the first upward trend line, possibly breaking also the 1.3075, breaking also the upward trend line, which has been incepted since the 10th of August, and start actively aiming for the 1.2945. It would be a requirement for a bearish outlook. On the other hand, should the bulls maintain control, given that the price action has respected the upward trend line, which was incepted since the 26th of August, this one, note the touch here. So we may see the price action being driven higher finally, breaking the 1.3205 and start actively aiming for the 1.3375. A possible stabilization could be signaled though through the breaking of the upward trend line and the price action remaining in the spectrum between the 1.3205 and the 1.3075 levels. Okay, let's have a look at the Aussie. The Aussie, which has dropped, it seems to be finding some support at 0.6710 with a nice touch here, testing here, validating the level. However, we have to go now and switch to 0.6760 from a support line to resistance line, given that the price action has dropped below it. And definitely don't need this. Let's go hunting for a new support line. Turning to the daily chart. Let's see if we have it in the forward. Nope, unfortunately not. Daily chart. It is. Somewhere here. And this would be in green 0.6610. Let's have a look at it in the forward chart now. Readjusting, further readjusting. Let's correct the labels. Ultimate resistance line now is being placed at 0.6840. Second resistance line being placed at 0.68. First resistance line being placed at the 0.6760, the former support line, but given that the price action has moved decisively lower, we turn to resistance line. First support line being placed at 0.6710, which was tested today during the Asian session. And second support line being placed at 0.6660, with the final support line being placed at the 0.6610. Lock this in. So there is a downward movement, and let me readjust this one, which was verified. There you go. We have an initiation of the downward trend line on the 26th of August, a touch on the 30th, a second touch on the 6th of September, and the price action keeps moving lower. So we tend to maintain our bearish outlook for now. The RSI indicator is also near the reading of 30. It actually tested the reading of 30, the RSI indicator, yet bounced slightly above it. It's currently at 33. Let's have a look. Yep, 34. So it's pretty low, indicating a rather bearish sentiment. On the other hand, note the Bollinger Bands. The price action yesterday was at some point below the lower Bollinger Band, yet today has corrected a little bit higher, which more or less has started to create some distance between the lower Bollinger Band and the price action, allowing for the price action probably for a further lower movement below the 0.6710. Okay. Should the 0.6710 be broken, we may see the price action attempting to approach the 0.6660. It's only 50 pips, so quite plausible given that the price action's movement yesterday was over 100 pips. Let's have a look at this. $109. So it's definitely within the range of the price action, which could even break the S2 if the intense downward motion is being continued. On the other hand, I wouldn't be surprised to see some stabilization or correction slightly higher before the bears once again take control and force the pair to dive lower below the 0.6710. Stabilization could be in play, possibly between the 0.6760 and the 0.6710. Yet we would require more price action, possibly up until tomorrow, to see whether the price action will obey the downward trend line we have just drawn or whether it will break it. Should it be broken and the price action remains between the R1 and the S1, that would be a signal for a sideways motion. On the other hand, for a bullish outlook, we would require A, the price action to reverse direction, rise, B, break the 0.6760, C, definitely we would require clear breaking of the pre-mentioned downward trend line, D, the price action to approach, if not even test, the 0.68 and break it. Okay, let's have a look now at Ncdusd. Ncdusd, which has a similar downward trend line, yet not that steep. And it's characteristic that it didn't bounce, but we could raise it a little bit at 0.60. Yep, that's better. So we tend to maintain a bias for a bearish outlook of Ncdusd, and in which case we may see the price action finally being able to break the 0.60 and start actively aiming for 0.5910. On the other hand, a correction higher could also occur. That could bring about some stabilization for the pair between the 0.6095 and the 0.60. For a bullish outlook, we would require a clear breaking of the R1 0.6095 and the price action to break definitely also the downward trend line and start actively aiming for the 0.62 resistance level. Let's have a look at gold now. Gold, which surprisingly did not drop substantially lower. It did, but in our opinion, not as it wasn't the wide drop we had expected. On the other hand, we have to note here that the downward peaks seem to be adjusting here. That would be the 1690. So we have a new support line here. On the other hand, 1713 could go a little bit higher to 1715. And I would like to readjust the validity of the S2. Daily. Yep. I would be readjusting here. This true point here, which was a low point on the 21st of April 2020, way back. Also, the S3 could go a little bit higher. Definitely to this level here. Note the peak here. And that would be the 1635. Yeah, that's better. Given that the price action of gold's price seems to have a lower degree of volatility, we narrowed the support lines. Let's make the necessary adjustments in the labels as well and correct them. Now, as we have mentioned, gold's price is already at pretty low levels, and we see how the price action was aiming for the 1680 support line, yet actually failed to reach it as such. So we tend to maintain a bias for a sideways movement right now, given also that the downward trend line in the past few days has been broken. Let's readjust this one. $190. Second support line now being placed at 1660. And the final support line being placed at 1635. Once again, our bias for a sideways motion seems to be holding, given the inaccuracy of gold's price to actually break below the 1690 support line. So we tend to expect the price action to remain between the 1715 and the 1690. On the other hand, should the bears actually gain control, I wouldn't be surprised to see it breaking below the 1690 and start aiming for the 1660. On the flip side, should the bulls take over, I would require for bullish outlook a clear breaking of the 1715 and the price action to start actively aiming, if not even testing, the 1740. Let's have another look at WTI now. WTI, which seems to be moving lower. Let's make the readjustments here. definitely we need some readjustments also in the levels. Okay, let's start. This is to go lower and meet this peak here. That would be the 97.20. Second resistance line could be placed here. However, I would like to see more verification before deciding on this. It could be a little bit higher. This would be more valid. And this would be the 102.50. The rest seem to be okay. Make the corrections in the labels. 97.20. 102.50. 87.20, 82.60, and the 77.45. So we see some stabilization of the price action for the commodity, which seems to be revolving around the 87.20 level. It's actually testing it to the upside right now. On the other hand, there's a downward motion which should not be ignored. I would like to see the price action rising a little bit higher, breaking the second peak here, possibly even this one, in order to feel more comfortable with a stabilizing price action. Note at the same time, though, that the RSI indicator has risen from the lows of around 34 and has now reached 46, which is quite substantial, should be noted. Yet I would like to see the RSI indicator stabilizing and running along the reading of 50 before switching into a bias for sideways movement. For the time being, we may see the bears taking over once again, and this time the price action may start aiming for the 82.60 support level. For a bullish outlook, we would require a clear breaking of the 87.20 to the upside, placing some distance, and the price action of WTI to start aiming, actually testing the 92.60, if not even breaching it. So that should be it for the day from us here at IronFX. From all of us here, best wishes for solid trading.
My name is Marilena, and today we're gonna talk about perspective. Perspective is key. Many traders hold the belief that when they start trading, they will win every single trade. This view is rather unrealistic and borderline utopian to say the least. Even the best traders have bad days. Losses are part of the process, and as a matter of fact, a strategy doesn't have to win all the time to be profitable. Many traders only win 50 to 60% of their trades. How is this possible, you may ask? They simply make more on their winners than they lose on their losers by being disciplined and by using different risk management techniques. But more importantly, they accept the fact they are going to lose sometimes and hence calibrate their perspective to reflect just that. This allows them to eliminate unnecessary stress by focusing on the big picture. Thank you for watching.
All right, let's begin today's session. Okay, guys, thanks for tuning in nice and early, right? If you're here for the first time or if you're here, there is a chat section. I'm just going to send a message through, right? That is a section, right? I forgot to change my name, right? Just let me change my name. I rename it to Desmond. All right. Okay, yeah. If you're here, there's a chat section that you can there's a chat section where you can just send your messages through, right? And I'll do my best to answer them. Kingsley, the recording should be sent to your email, right? Hopefully it'll be sent to your email, right? I'll need to check up with IronFX on that. But today's session is a very exciting session, right? It's actually going to talk about very, very effective style of trading, a trading strategy which I've used very effectively, right? Made good amounts of money with it, right? And it's a pretty, it puts together what we've learned so far on support and resistance, pullbacks, overlaps, what we learned last week, and we're going to apply it this week. All right. Now, let's begin today's session. Okay. First and foremost, of course, disclaimer, everything in this webinar is educational in nature, so nothing should be construed as investment or trading advice. Please do your own little due diligence before you guys trade, okay? Now I see Natalia has tuned in too. Nice to see you here, Natalia. I thought I'll be seeing you in the VIP room. I didn't see a registration come through. I was looking out for you all week, man. Right. But all right, let's continue in today's session. For those of you all who are here for the first time or wondering who am I, right? My name is Desmond Leong. I run the award-winning research firm, Everest Fortune Group, and also the Forex Army, right? Where is my marker? I have a little marker over here. Yeah, so we are finalists of 2019, 2020, and 2021 for Best FX Research, and 2020 and 2021 for Best Equity Research, right? Really strong team of traders, right? And we usually work with the institutions on telling them where the markets are heading, but we have a special partnership with IronFX, where we're bringing you guys the good stuff, the juicy stuff, the stuff that will take your trading to the next level. Right, yeah, Natalia, waiting for you, man. Let me know if you're in difficulties joining the VIP room, all right? I'll give you guys a link to get access to it later, okay? Now, if there's anything I want to encourage you guys that, yeah, you know, I'm a very young guy, 32 years of age, right? And if there's any word of encouragement I want to share with you is that you don't need 30 years in business, right, to be a good trader. You don't need 30 years in Bloomberg to be a good trader. You just need 30 days learning the right stuff. And here at IronFX, we're going to teach you the right stuff on how to be a better trader. Okay? But of course, whenever you have questions, please send them through so I can answer them. Otherwise, you know, it's going to be lonely if it's just me talking to myself. All right, guys. So yeah, please, anytime you got questions, just send them through. Now, let's begin today's session, right? I'm going to touch on trend lines, right? The ways we can use trend lines. Then we look at channels. Right? Channels are, you know, trend lines are, you know, are up and down. Channels are essentially parallel trend lines, right? There's a proper way to use it. I'll touch on how you can use this to improve the probability of your setups, and I'll be showing you some live examples on some of the calls we did that turned out really well, right? And it's actually a way to apply this form of technical analysis into trading, right? If you apply it properly, trust me, it can be one of the best and most profitable kind of trading strategies you encounter. Okay, now let's move on from here. So just remember, when it's a recap on our last week's session, always look out for significant swings. All right, It's very effective when you're doing trend lines. It's very effective when you're doing channels, right? If you draw a trend line like that, you look at the significant swings. You look at the significant swings. Okay, we usually don't try to use the smaller insignificant swings over here. Yep. So these are the insignificant swings. They're not that useful when you plot like little channels here and stuff, right? You're looking for the bigger levels to plot your trend lines. Okay, so always keep that in mind. Now, okay, these are significant multiple swings. All right, so this is really quickly what one of the key things I'll be showing you later, right? We did touch last week on the multiple swing highs, right? Multiple swing highs. When you combine them together, you can find a very nice level of resistance or support. I'll be showing you how you can use this in your trading this week. All right, pretty interesting stuff. Pretty interesting stuff. Okay, now let's first look at trend lines. Let's first look at trend lines. Remember, guys, again, I encourage you guys that if you have any questions at any time, please send them right through. I'll do my best. I literally have another screen open here to answer you guys. Okay, now trend lines, right? So one of the questions that we've always wondered, right, is when you use a trend line, do you use the week or do you not use the week, right? So this uses the week. Some people prefer not to use the week. Okay, now I'm going to give you guys the answer here is that when you're drawing trend lines, one of the best things to do is to use the week, right? So you notice that when you change the trend, when you change the time frame, like for example, if this is the H4 time frame and you change it to H1, oh yeah, so Techno is asking where people can access my clips on me teaching. That's a good question. I realized I forgot to cover that with you guys, right? I'm gonna show it to you over here. For the upcoming webinars, right? For the upcoming webinars, there's a past webinars and the upcoming webinars. All right. So past webinars is over here. Upcoming webinars is over here on the main IronFX website. Okay. So past webinars, that's me. That's Cass. You might have seen her, right? So this is the if you want, you filter based on English, and you can see all the different past webinars here. It's really, really nice. And you can kind of see what we had taught for the session. You click watch webinar. And there you go, right? It's over here, right? It's a great session.
Consistent.
This was Cassandra.
If you are crossing the.
I kind of thought usually there's usually a recording of self somewhere. Yep, there we go. Okay, so that's where the past webinars are. And of course, if you want to watch, please do sign up for upcoming webinars, right? The upcoming webinars we have our upcoming webinars. It usually takes a while to load over here. Right, you can click on English, right? And after our session this week, we're going to have our top price action setups next week. All right. Yes, you can access it on YouTube, right? So this is actually the YouTube playlist, right? And we are going to click on this button called here. This is the link. This is the link that you want to go to. This is the playlist on YouTube. Okay, so yeah, you can come in here and you can watch the webinars over here. Okay, pretty good stuff. I think it's you just need to watch each and every one, right? So like last week's session, some pullbacks, overlaps, and swings. You can check it out over here, right? So anytime I'm referring to my previous webinar, you can check it out over here. Okay, guys, I hope that answers your question or where you can find it. Okay, now let's go back to today's session. All right, let's go back to today's session. Okay, so like for example over here, H4, right? When I change it to H1, right? For example, if I change it to H1, you notice that there is all the different bounces that happen over here. It is the same bounces that happen over here, right? And that is because we take the wick, right? If you don't take the wick, in this example, right? This is when we do not take the wick. That's where it becomes very, it doesn't look that nice when we draw it, right? So on the H4, it might look nice, right? We're not taking the wick on the H4, right? You can see that we ignore the wicks over here, we ignore the wick over here, ignore the wick over here. But what happens on the H1 chart is that if you change the time frame, you notice that it becomes like this, it just cuts right through and it doesn't look very nice, right? So that is the reason that when we are drawing, when we're doing technical analysis, when we're drawing trend lines, always include the wick, right? Because when you include the wick, no matter whether you're on the H4, you're on the H1, you're on the M5, you're on the M15, right? All of it will give you the same reading, right? But if you use no wick, right? No wick, you will get stuff like this where you have absolutely terrible example. Let me show you an example. Let me try to show you an example over here. Okay, I'm just going to load my chart. See. Let's see if I have an example somewhere that we can look at. One where there's a very big wick or something. Let me just check it out. Okay, let me show you the difference, right? So on the H4, you look at this. Let's ignore that wick over there. Let me find a wick. Okay. Now for this example, for example, right? So imagine if we drew like this line, and we catch this wick over here. Okay. Look at this wick over here. We caught it over here. When I change to the H1, to the M30, oh man, I need to scroll back and forth. It's quite messy. Give me a second. I just drew it, but I can't find it. I'm going to do a bar replay. I'm going to show you exactly what I mean. Okay. Now look at this. It catches it perfectly. If I change it to the H1, it catches it perfectly, right? If I change it to the 1 day, it catches it perfectly at the bottom, right? If I change it to the 15-minute chart, oh, there's no data here, right? 30-minute chart. Is it 1 hour chart? Oh, because there's no data points there. Did I change my price feed or something? Just give me a second. Just give me a second. I think they what I want to show you is that if you take an example, you catch the lows over here. On the H4 chart, it looks nice, right? You're catching the closing price, you ignore the wicks. But if you change the time frame, like let's change it to H1, you can see that suddenly this doesn't look very nice, right? No one would draw a line this way and cut it like that, right? So on the H1 chart, it looks terrible, but on the H4 chart, it looks okay, right? That's why you need to always take the wick, because when you take the wick in examples like this, right, whether you're on the H4 chart, whether you are on the whether you're on the 1 day chart, whether you're on the 1 hour chart, let's go back to the 1 hour chart. You can see it over here. Whether you're on the 1 hour chart, it all catches the low perfectly, right? That is why you need to use the wick when you're drawing trend lines. Okay. Now, the next thing that I want to do, right? You notice that this tends to look slightly better. This tends to look slightly better than this. The only difference is the time frame that is being used. Okay, this is the H4 time frame. This is the H1 time frame. So sometimes if something doesn't look that clear on the H1 time frame, right, you're starting to see, you're looking at too granular data over here, right? There's nothing wrong with changing it to the H4 time frame or going one time frame larger so that you see the bigger picture, right? You notice this one, you're seeing a lot of granular data in between, which is not that effective, right? It's telling you the same thing. This and this, they are the exact same thing. Okay, just that this one uses a higher time frame and it filters out a little bit more of the noise. Okay, so this is a little trick that you can use when you're analyzing charts too. Okay, now this trend line, right? How many people want to take a guess? Is this trend line okay or is it not okay? This ascending support trend line, is it yay or is it nay? Is it correct or is it wrong? Okay, I see a couple of answers, right? Some saying is it correct? Okay, let me share with you the answer here. Okay, Techno's also saying it's correct. It's wrong. Why is it wrong? Okay, because a trend line, a trend line support should not be decreasing. Okay, imagine you're a man, right? And you have a slope, and you're walking up a slope. It's very easy to walk up a slope, right? There is very clear support over there. But if you are a man and there is a slope down, you know this is very hard to find support. You just keep going, and then you're walking down. If the slope is very steep, you end up just maybe tumbling down, right? Because it's very hard to find support when the slope is steep, right? As in it's sloping downwards. It's very easy to find support when the slope is upwards. You can easily go up. But when it's sloping downwards, it's a slippery slope. Very hard to find support. That's why in such a situation, right? Whenever you see a trend line that is sliding downwards, right, stay out of it. It's very hard to catch a bounce when it's sliding down, right? Because you think about it, the overall momentum is bearish, right? If you look at that, price is making lower high, lower high, lower high, lower, lower, lower. It's going lower and lower. As it is going lower, you already have the bearish momentum pushing it down, right? You already have bearish momentum pushing it down. And when you're trying to buy over here, trying to buy to go up, because you have bearish momentum pushing it down, it gives you a much lower success rate, right? Your hit rate usually is greatly affected, right? You have a much lower success rate of catching the moves correctly, okay? So that is an important consideration when it comes to drawing. That's an important consideration when you're drawing trend lines. A supporting trend line should only trend line from the bottom, right? So if you have a trend line, it should only be from the bottom. That is what you're looking to catch: bounce, 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 bounce. Because you have the overall trend going up, it's easier and more effective to catch the bounces when your trend line is going upwards. Now, the same thing is true when you have a downtrend, right? You have a bearish trend line going downwards. That's where, as you can see, it's going downwards over here. That's where, it's easier when you have a descending trend line. So look at this case, we have a descending trend line. We have a descending trend line, but it is at the bottom of price, which is wrong. If the descending trend line is at the top, then it works. But if it's at the bottom of price, it does not work, okay? So same thing here, it's descending trend line, dropping, dropping, dropping. Very nice, right? That is okay if it's on the top, right? So you're always looking for a trend line from the top if it's descending. Okay, important considerations to take note of, right? 2 trend lines is tentative. 3 trend lines is a valid trend line. So you got 1 trend, 1, 2, 3 touches. 3 touches becomes a valid trend line. Okay, so you can see how you have 1, 2, 3 becomes a confirmed trend line. 4 is where the nice little reaction happens. 2 is always called tentative because there are too many occurrences of trend lines having 2 touches. What do I mean by that? Right. So I just come here. If I were to use a trend line 2 touch every single time, right, there'll be too many of them, right? You can draw 1, 2. Okay, this is 3 touches. It's not bad, right? And you can see how there is like 1 touch here, 2 touch, 3 touch, 4th small little reversal over here, right? But if you use 2 touches, you can literally draw almost every single thing. Here to here is 2 touch, right? Here to here is 2 touch. Here to here is 2 touch, right? And it becomes a lot less effective, right? Here to here is 2 touch, right? So what you want to do is to minimally have 3 touches, right? Then you have this thing called a valid trend line. So at the 3rd touch, it becomes valid, right? Then you look to trade from the 4th touch. 2 touches is just too common, right? You can just literally take any 2 points and combine it together, becomes a trend line. And when it's too common, it's usually not that effective. Okay, guys? Now, moving on to the next topic, right? Which time frame should you use trend lines on? Well, the answer to this question is that you usually use it on the higher time frame, right? So the higher time frames usually on the H1, on the H4, they do slightly better. Even on the D1, the 1 day charts, they work slightly better. On the smaller time frames, they don't work that well. Okay, on the smaller time frames, they don't work that well. So that is just the truth when it comes to using trend lines, or actually any form of technical analysis. All right, guys. Let's move on from here. There are a few things that I want to show you on how you can improve your setup. Okay, so when you're drawing trend lines, for example, the first thing you do is you load up the Ichimoku cloud. To load up the Ichimoku cloud, right? Usually when you load Ichimoku, right? I'm going to show it to you here. Usually you have all this, okay? You have all these things, which is very, very messy. What you want to do is to edit it, and you want to remove everything and just leave the cloud. Just leave the cloud. The cloud will give you a good enough gauge on the momentum of the market, okay? The cloud itself is a good enough gauge on the momentum of the market. So in this case, we just draw a nice little cloud here. Notice that the cloud prices tend to respect the cloud quite nicely, okay? Now, after you use the Ichimoku cloud, then you add in a trend line, right? So we got a nice little trend line over here. Not only do we have a nice trend line, we also have a nice 38% Fibonacci retracement from here down to here. Not only do we have that, we notice that each time price reverse, it was close to a 99%, right? Reverse once, reverse twice, the reversal happened on the 99%. So we got 4 reasons, we got trend line, we got cloud, we got 38%, we got stochastic, all of it leading to a very nice example of price dropping very nicely. Okay, so that is the important, that's one of the tricks when it comes to technical analysis, right? You don't want to be using just one single trend line to trade. You want to combine it with multiple things together to give yourself the highest chance of being a profitable trader. Okay, you can imagine that maybe if you have the Ichimoku cloud by itself, you have a 30% chance of being correct. You add in the trend line, you got a 20% chance of being correct. You add in the Fibonacci, you got maybe a 10% chance of being correct. You add in the stochastic, you got another 10% chance of being correct. By itself, right, is not going to be effective, like a small chance. But you combine it all together, what do you have? You have a 70% chance of being correct. It's only effective if you combine it all together, right? If you just trade it individually, that's often a little bit too weak, right? So that is the trick to a lot of these trading strategies, is combining multiple factors together to give yourself the highest chance of a profitable trade. Okay, now let's show you some live examples. Okay, I'll show you some live examples of the setups that I evaluated, how I broke it down, and why, how you can apply it in your trading. Okay, if you have questions regarding this, or you want me to look at some other charts or some other instruments, you can let me know and I'll take a look at them. All right, now let's look at this setup over here. So this is the link, right? So each of this, oops, how do just give me a second. I think I have I need to go back to my slideshow again, sorry. Okay, I'm back here again. Sorry about that. Right. I just wanted to show you a link. It seems like when I click the link, I'm not sure where it loads. It doesn't seem to load. But it's okay. Oh, it does load over here, right? So this all of it is timestamp. So this was posted on the 7th of April. Back to another session of using technical analysis to find it. Yeah, this was posted on the 7th of April. So you can see towards the analysis, what we did for the analysis is really simple, right? There was a annotate. Actually, I'm going to just show it to you over here. You can see over here, I'm going to draw, right? There was a trend line, 1 touch, 2 touch, 3 touch, 4 touch, breakout, right? So the trend line broke out. There was a descending trend line that was pushing prices down. There's the Ichimoku cloud over here. So you can see Ichimoku cloud, and price broke this very nice resistance level. Okay, so price on a pullback resistance, it broke a key ascending trend line, which is this one. It has a bearish trend line that is pushing it down, as you can see, a nice little bearish trend line pushing it down, and it's below the Ichimoku. Although it's not as strong, but price is below the Ichimoku. So we concluded that price would drop to the next key level, key support level over here. Okay, what has happened since then? You can see that price dropped perfectly to our target over here. Okay, so this is an example of applying technical analysis to trading, right? Especially playing the trend line breakout, because the moment price breaks out of this trend line, right, it starts to feel very bearish. You throw in the bearish momentum, you throw in the Ichimoku cloud momentum, you have enough momentum to push it down to the next key support, right? So this is one example. I will show you more examples. Let me just show you another example over here, right? So in this example, price broke out of a channel, right? You can see nice little channel. Requirement for channels is that you must have 4 touches. You got 1 touch over here, 2 touch over here, 3 touch over here, 4 touch over here, right? 1, 2, 3, 4. Price broke a nice overlap resistance turn support, right? So you can see that there was this nice little resistance turn support, right? So price broke out of it and it's coming back down, right? And this was the level where it kind of broke out of the channel too. So you got 2 of it. Price then broke a 23% retracement. You can see a Fibonacci retracement over here, 23. So whenever price breaks a 23% retracement, the next level that it likes to go up to is the 38% retracement. Okay, so we believe that it will go up 38% retracement and price cross over the Ichimoku. If I'm not wrong, the Ichimoku was over here when we drew this example. Okay, you can see how 4 things all lining up very, very nicely over here. And what happened, right? You can see we are going to call for this bounce up to here. You can see over here, price bounce up very, very nicely to our overlap over here. Right, so it's a very, very nice setup, very, very high probability setup, right? So each of these, right, this could have been a 30% chance of being correct. This could be 20% chance, right? This could be 20% chance, right? This might be 10% chance, right? So by themselves, they're not good, but you combine them all together, right? You combine them all together and you have maybe 80% chance of being correct on this setup. Okay, I'll show you a couple more examples, right? And remember, guys, if you have any questions at any point in time, just send it to me and I'll be more than glad to answer them. This is another example that we're looking at. So this is a continuation. This was a super duper duper nice setup. Okay, so you notice that there was price is testing a bearish channel resistance. Why is it a channel? 1 touch, 2 touch, 3 touch, 4 touches. Actually, about 5 touches, right? We got 1, 2, 3, 4, 5 touches. Price is testing a pullback resistance, right? 1. This is a pullback resistance over here. What does a pullback resistance mean? You can check out our previous webinar on that. Okay, price is below the Ichimoku cloud. You can see that the cloud holds prices down very nicely, hold price down very nicely, and price is right at the Ichimoku cloud over there. Price is testing a short-term 38% retracement over here. Price is testing a longer-term 23% retracement, starting point here, ending point here. So there are a lot of reasons why this is a very strong level. So we are going to call for prices to drop from this level. Now, what has happened since then? If you scroll down, you can see how price dropped very, very nicely, right? Touch a level and it dropped very, very nicely to our take profit target, right? So you can see, we're calling for the drop to the next pullback support. That's exactly what happened. So we played it back to this pullback support over here. That is enough to make money. Okay, that is enough to make money if a good 1:1 risk to reward kind of setup. Okay, this is another example. This is another example we have, right? Notice trend line, 1 touch, 2 touch, 3 touch trend line. Price broke out of this trend line. Okay, price broke out of this trend line and it crossed below the Ichimoku. You can see it crossed below the Ichimoku over here. Very importantly, right? This is why I like this trade is because not only is there a bearish exit. This is an example of price being bearish, but if you look at the bigger trend, right? There's a very, very nice bearish channel that is still loading on so much pressure to continue to push prices down, right? To push prices lower. So you got very, very strong bearish momentum over here, right? You crossed below the Ichimoku and you broke an ascending support. So we're looking to play down to the next big support over here. And very nicely, you can see how price, it broke that level, come down, touch our take profit, right? And, it bag us out now, bag us a nice amount of pips for our profit, okay? Now guys, so this is the setup, right? I want to create a little bit of a checklist for you guys, right? The checklist is very simple. The first thing is, what happened to trend line? The trend line, did price break out of a trend line? The second thing you need to look out for is the Ichimoku. Okay, did price also break out of the Ichimoku? Third thing you need to look out for is the larger momentum of the market. What do I mean by larger momentum? Right, you have this as the larger momentum as an example, right? Is it in your favor or not in your favor, right? Is it using a channel? So could it be a channel, right? Or could it be a big Ichimoku cloud? Or could it be a big moving average, like maybe the 100 or the 200 moving average? Okay, so once you have those three things, then you must see, did it break a key support level? So support and resistance level, you need to see if it broke a key level, right? Then lastly, you can see whether it broke a nice Fibonacci. If it did, even better, right? It broke a Fibonacci, it should trigger. If it broke the 23, it should go down to the 38. If it broke the 38, it should go down to the 50. If it broke the 50, it should go down to the 61.8, and it goes on and on, right? But you just need to know how to draw Fibonacci correctly to use this effectively, okay? And if you have this thing checked off, is a very, very high probability setup. You're going to look at your take profit. For a take profit, look at the chart and play it to the next key level. Why do I play it to this level and not this level over here? It's because this is a big level. Price bounce over here, and since what? Since 2017 or 2018, price has not came back down to that level. So it's about 5 years since price came down to that level. It would be foolish of me to just want to play a move beyond that. This move here is enough for me. Okay, so the tighter you keep your stop loss, the more profits you can make, right? Because of the better risk to reward kind of setup that you have. Okay, guys. Now I do want to show you guys a couple of things. If you have the time, please try to tune in to that. Right, you can head to this site called vip.infx.com. I'm going to show you the registration process, okay? Because, because a couple of people are wondering how to register. vip.infx.com, if this is a site you want to go to, when you go there, you'll be asked to click this thing, join IronFX server. Okay, if you try to access any of the stuff by the site, I think it's all blurred out, so you can't really see it, right? So you can click join IronFX server, click register. Okay, so we're just gonna come up with a random stuff over here, right? We're gonna come up with a simple username, right, and the password. Now, when you click register, I'm gonna show you the process. You need to agree to the disclaimers, as you can see over here, right? You can disable that. Join server. Now, you notice that when you join, there's nothing here, nothing that you can see. You must click on this thing called request access. When you click on request access, they say, please attach proof of your IronFX live account to get access. Click request to join channel. Please let me in. You can upload your files, right? So maybe we upload the simple picture of ourselves, maybe diamond hands. For those of you guys know what diamond hands is, it's diamond hands. Send in request. Okay, so once you send in the request, right, you can see that your request is pending approval. What happens is that on my side, I can just come in here. I can look at request management and I can see, okay, this guy has requested access, right? What has he attached? Diamond hands, right? This is proof of his live account. I will accept it. I'll give you a nice role. And once I give you the role, right, this is where you can get access to it and you can see all the different channels by the site. And this is a place where you can start asking questions, right? So imagine you're looking at this and you're wondering, okay, euro dollar, do I sell from here? You can say, hey, at mention, hey, Desmond, do I sell from this level? What level are you referring to? You just need to highlight the text, click this button called link object to text, select whatever you just drew, click confirm, and send it through, right? So imagine I come back here, right? I come back here and I see that someone has asked me a question, right? Someone has asked me a question. Hey, do I sell from this level? What level are you referring to? All I need to do is to hover my mouse over it and you can see it lights up on the chart. So I know, oh, okay, this is the exact level that you were referring to, right? And that is where we can help you become a better trader, right? Because I can just come in here. It's like, okay, awesome. Give you a nice little thumbs up. Come in here and I say that, yeah, it looks like a nice level. And it also, right? It also seems to line up with the 61.8, right? That's why I can say it also lines up with the 61.8 retracement. Same thing, highlight this text, and I can even select the exact retracement that I'm referring to, send it through. How it looks like is that when you hover your mouse over it, you can see this is the exact tool that I was referring to. Okay, guys? This is a really, really nice, simple way that you can register for the VIP room, right? And it allows me to actually guide you better to be a better trader, right? So anytime you got questions, to just send it through. All you need to do is to have a live IronFX account to get access to this. Okay, guys? Now, I do want to show you one example on crude oil on the daily chart, which I think it might be, you guys might be interested in. Was it crude oil? Or it could have been crude oil. Yes, on the daily chart. This could be a nice setup for you guys to look at, okay? This is what I mean by applying what we've learned. We draw a trend line from here until here. So Techno is asking how to have a live IronFX account. Just go to ironfx.com. This link here, copy link address. Register for it over here. And you can get a live IronFX account. Okay. Now, anyway, back to this. Yeah. So please, if you have the chance, please just go get that, get access to the IronFX VIP room, because I believe, I'm not sure when, but they'll be increasing the entry requirements in the future. For now, all you need is an IronFX account, but maybe in the future, you know, you need to put in like a couple, like $10,000 just to get access to it, right? So if it's in a promotional stage now, so go register for an IronFX account if you don't have one, just to get access to this. Okay, once I give you access, no one can take that away from you. So this is an example of applying what we learned today. Trend line, 1 touch, 2 touch, 3 touch, 4 touch, 5 touch. 5 touches here. So this is a valid trend line. Okay, price has since broke out from the trend line. So we're expecting it to maybe drop down. Okay, so what do we do once we have identified this? We throw on the Ichimoku cloud and we notice that price is crossing below the Ichimoku cloud. If it drops here, right, it will actually cross below the Ichimoku, which is a very nice thing. Okay, what is the support level that it needs to break? I am a little bit wary about this support level, right? We can see that price bounced off very nicely from there previously and is right there again. So we need price to break this level to trigger the move down. I believe that the next big level that it would probably drop down to is over here, right? This could be the next key level that it might drop down to. Okay, but first and foremost, it needs to break this key level, you know, trigger the move down. All right, so yeah, these are some things that you can take note of, right? That it's when you're doing analysis, it's very easy to find trend lines. You find a trend line, you throw up the Ichimoku cloud, you throw up the support and resistance levels. See, this is what I call a downside confirmation, meaning that we need to wait for price to break this level before prices go down. Okay, it's a setup which I am also watching on myself. Now, guys, we got a little bit of time here, right? I'm just gonna open the time to the floor, is there any questions you guys have, or is there any particular market or instrument you want me to take a look at? Okay. Let me just pull it back to this level. All right. Yeah, so I hope that this webinar gave you a good idea on how to apply trend lines, how to apply channels, right? Along with all different live examples, how you can apply it better to your trading. Creating a nice little checkbox system. You got trend lines, you got Ichimoku, you look at larger momentum, right? You look at which is made up by the channels, the Ichimoku, the moving average, right? You can look at support and resistance as a key trigger. Look at Fibonacci too, which we'll be covering in the future webinars, right? And if you combine all of it together, right, that's where you can become a better, that's where you can decide whether it's a nice enough setup, right? Kingsley, how can you learn FX as a professional? First, you can learn it from us. Secondly, I believe one of the places that you can go to, is it here? Yeah, one of the places that you can go to in the IronFX room is the IronFX school over here. So this is a great place for you to really learn stuff, right? I would start the webinars, a little bit of the podcast. I also create the podcast that you can look at, and the VIP room will give you the guidance, right? Because you can learn, but if you apply it wrongly, it is equally bad. So you must learn and apply it correctly, right? That's why jumping onto the VIP room is a great place where you can practice what you learn, and you can ask questions to professionals. Because if you ask questions and you're asking it to other people who might not know their way around, then you might be learning the wrong stuff, right? So that's one thing I want to encourage you guys to do, is that don't just learn, you must practice. Where do you practice? In the VIP room. As long as you have an IronFX account, you can get access to that. Just go get access to it faster. All right. Now, we are coming up with IronFX Academy soon, right? We are putting in the content soon. Hopefully I'll get it out to you guys in the next 1 or 2 weeks, and I will have another place to direct you guys to learn how to trade better. Okay. Now, if no one has any other questions, right? Thank you very much for tuning in to today's session, right? I hope you really learned how to apply trend lines, channels, support and resistance, combining them together to play breakouts, to play continuations, right? And you know where to find me in the VIP room. Otherwise, please register for tomorrow's live webinar. I'm going to give you the link over here. Tomorrow's live webinar is a live trading session, right? I can show you. It's a live trading session over here, right? Pretty fun time where I will actually show you guys some of the calls I'm making live, right? And you can trade them together. We have a pretty high hit rate of 70 to 80%. So, if it works out well, that'd be great, right? Yeah, but join me tomorrow in tomorrow's session, right? Otherwise, thank you very much, guys. Stay safe, trade safe. I will catch you guys again tomorrow. Okay. Thank you, everyone. Right. I can see a couple of you guys saying bye, right? Thank you, Kingsley. Thank you, Techno. Thank you, Natalia. Right. Thank you, everyone else. I will see you guys either tomorrow or next week. Okay. Adios. Bye-bye. Thank you, guys.
Hello everyone, my name is Emily and today we are going to talk about the affiliation program. So what is an affiliate program? To simply put it, an affiliate program is an agreement in which a business pays another business or individual a commission for driving traffic or sales their way. Within the world of forex trading, this involves a forex broker and a forex affiliate, with the affiliate referring clients to the broker. So how does this work? Firstly, you register as an affiliate with IronFX. Then you share your referral link with your network on your website or your blog. Then you get your client to click on the link, register with IronFX and start trading. And then last but not least, you receive a commission. Now the question is how to join our affiliate program. The first step is to register as an affiliate in the IronFX portal. Then you have to log in to your affiliate portal and get access to a wide range of marketing material. Then you get your referral link and use the promotional material on your website or other. And last step is you start earning commissions through one of the most popular forex affiliate programs for each client you refer to IronFX. Thank you so much for joining us today, guys. See you tomorrow. Bye-bye.